So good morning students, welcome back to my channel. Okay, so today I am going to do an illustration from hire purchase system in financial accounting paper. Okay, it is illustration number 21 from B.B.Dam book. Okay, so what we have seen is in every question, okay, we have done previously, okay, the rate of interest is given in the question. Okay, but here the rate of interest is not given. Okay, you see how to calculate the amount of interest each year. You see on 1/4/2018, that is April 2018, Kavita and Sons, a partnership firm, purchased a computer. Okay, so what rupees 60,000. What is the cash price of the computer? It is 60,000 from Messrs Computer Solutions. Okay, so who is the hire vendor? Computer Solutions on hire purchase system, and paid rupees 20,000 as down payment. So rupees 20,000 is the amount of down payment. The balance was payable in 3 equal annual installments, and the balance was paid in 3 equal annual installments of value rupees 15,000 each. Okay, and year ends on 31st March each year. Okay, show the calculation of interest. You have to take out the amount of interest to be charged each year and the entry in the PL account of each year. Okay, and how this amount of interest is debited and credited in the books of hire purchaser and in the books of hire vendor. Okay, each year, that you have to show. And this sum came in the year 2014. Okay, BCom Guwahati University. Okay, so just see, since rate of interest is not given, okay, interest will be calculated as follows. So since rate of interest is not given, how the interest is calculated? You just see hire purchase price. What is the hire purchase price? Okay, it is down payment plus amount of, okay, each installment multiplied by 3, because there are 3 equal annual installments. So you get 65,000. Okay, now what is the cash price? Okay, you have to deduct cash price, okay, from the hire purchase price to get the total amount of interest. Okay, total interest. So less 60,000. So what is the total interest payable? It is 5,000. 5,000. Okay. Now this 5,000, okay, will be distributed, okay, will be apportioned in 3 years. Okay, in 3 years, okay, in the ratio, okay, in some ratio. So that ratio you have to take out. So you just see, now total interest will be apportioned as follows. Okay, you just see. So the computer was purchased on 2018. So 2018 to 19. Okay, what is the hire purchase price? Means total price to be paid for the purchase of computer. It is 65,000. So at the beginning of the year, that is 2018, okay, 20,000 was paid. Yes or no on the date of purchase. Okay, so less 20,000. So what is the amount left over? 45,000. Okay, now in the second year, that is 2019-20, okay, in the beginning of the year, okay, from 45,000, the first year's installment was paid, that is 15,000. Okay, first year's installment, okay, that was paid on 31st of March 2019. Okay, so that should be deducted in the beginning of the second year. So 30,000 is obtained. Okay, so beginning of the year is to be taken, okay, for deduction, okay, to take out the difference. Okay, so in the next year, that is 2021, from 30,000 again 15,000 was deducted. Okay, in the beginning of the year, that is 2021. So 15,000 was deducted. What is left over? 15,000. Okay, and you see, then a ratio will be taken out. So from 15,000, the next year, okay, installment will be paid. So 15,000 minus 15,000, it will be 0. So no need of that. Okay, just you take out up till 2021. Okay, 2021. So now you just take out the ratio, it will be 3 to 1 because 3 zeros cancel, 15 1 are 15, 15 2 are 30 and 15 3 are 45. Okay, so 3 to 1. You take out the total of the ratios, it is 6. Okay, now from this, okay, in this 5000, okay, 5000 you have 3 by 6, okay, 5000 into 2 by 6 and 5000 into 1 by 6. Now when you solve, you will get 2500 as the amount of interest for the year 2018-19. Okay, 1667 as the amount of interest for 1920. Okay, and 833 for as the amount of interest for 2021. Okay, so this is how it is calculated. Okay, first year interest is 2500, second year it is 1667, and the third year it is 833. Okay, so this is how, okay, the amount of interest is calculated, okay, for each year. Now you see, okay, you have to debit and credit in the books of hire purchaser and hire vendor. Okay, so books of hire purchaser is taken. Okay, so PL account. Okay, you see, to interest account. Okay, so this is for the first year, that is 18-19. Okay, it is 18-19. Okay, what is the amount to interest? It is 2500. Okay, now again in the books of hire vendor, it is 18-19. Okay, to, you see, by interest 2500. Okay, so 18-19. Okay, to interest. Okay, it is books of hire purchaser. So interest will be written in the debit side. This is an expense for the hire purchaser. So to interest account 2500 for 18-19. Then you again prepare another format for PL account for 19-20 year. Okay, then you write to interest, you write put this amount 1667. Again you prepare another account in the books of hire purchaser, okay, for the year 2021. Okay, and put this amount, the amount of interest. To interest 833. Okay, now in the books of hire vendor also similarly you have to do. You have to prepare PL account for 18-19, 19-20, then 20-21. Okay, so 18-19, this is an income. Okay, this is an income for the hire vendor. Okay, so it should be written in the credit side. Okay, so what you will write? By interest account 2500. Okay, then again by interest account 1667. Again you write by interest account 833. Okay. So this is how you have to prepare, okay, 3 formats for PL account for in the books of hire purchaser, and 3 formats, okay, for PL account in the books of hire vendor. Okay, so that is only asked in this question. Okay, to prepare the PL accounts in the books of hire purchaser and hire vendor. Okay, how the entries will be passed in the PL account for the amount of interest charged each year. Okay, and the calculation of interest when the rate is not given. Okay, so this is how it is calculated. Okay, you have to take the beginning of the year, that what happened in the beginning of the year. Okay, like in the beginning of 2018, down payment was paid, so it became 45,000. Down payment was deducted, it became 45,000. Then again in the beginning of the second year, okay, the first installment was paid on 31st March 2019. Okay, so that first year's installment was deducted. Again in the beginning of the third year, okay, you see second year's installment was paid. Okay, that is 15,000. So what is left over? 15,000. Okay, so again at the end of the third year, okay, the third installment was paid. So 15,000 minus 15,000, it will not be considered. 0 will not be considered. Okay, so beginning of the year will be taken up. okay, 2018 beginning, 2019 beginning, and 2020 beginning. Okay, because the last installment, that is third installment, was paid at the end of, okay, 20, at the end of, okay, the third year, that is 2021. Okay, 2021. Okay, so this is how interest is calculated, okay, for 3 years. Okay, okay, for 3 years, okay, when the rate of interest is not given. Okay, so I hope this sum is very clear to you, and this is important also. It came in the year 2014. Okay, so you please see this sum, okay, and try to solve it at your home, because the complete sum I have not done. I have only tried to explain you by doing the critical portions. Okay, so if you like my video, please share and comment, and the new viewers, subscribe to my channel, okay, and press the bell icon. Okay, thank you for today.